We want to welcome our guest with the day's proverb. So the proverbs for the other Monday, Tuesday, Wednesday, Thursday were from Malawi. Today's proverb is from Nigeria. Character is like pregnancy. You cannot hide it. Character is like pregnancy. You cannot hide it. Bwana Kenneth Odhiambo, good morning.
Good morning.
Welcome to the hot seat of Kenya's biggest conversation.
Thank you.
It's good to have you here. That proverb is from Igbo in Nigeria. No, we don't say the G.
We don't
It's a Igbo.
We don't say it's from Igbo. We just say it is Igbo.
That proverb is
Igbo.
Igbo.
Yes. It's an Igbo proverb.
So it's Igbo.
It's like saying you cannot say it's from Swahili. What is that?
You can.
No, you can't.
Swahili are people.
You wouldn't say it. But you say it's from the Swahili people.
That proverb is from the Igbo people
Thank you very much.
of Nigeria.
Mm.
Do you get anything from it? Character is like pregnancy. You cannot hide it.
Right. I think as the saying goes, I mean, issues of character, I mean, manifests itself in terms of how you are as a person. Let me talk for myself. And of course, that also touches on what people know about you, what people understand in terms of what you can do, how people look at you in terms of what you can say at any moment in time, what you can deliver at any moment in time, how you behave, how you shape the thinking of other people. And there must be some element of consistency, in character. Yeah, so that's the way I would look at it.
And you cannot really hide it. People will see who you are as a person. People will see your character.
Absolutely.
Great. We're here to talk about the Mwalimu National Sacco and just looking at the Sacco industry as a whole.
Yeah.
And how then we can also continue building trust, digital trust in Sacco movement and Sacco industry. Let's talk about Mwalimu Sacco first.
Right.
How many members do you have? How old is this Sacco? I mean, it's one of the oldest and largest Saccos in the country.
Right. In terms of membership, as at December, we closed at 116,426. So that is the membership that we currently have. And of course, it's drawn from the teaching fraternity, the universities, the colleges, the TVETs, the mainstream civil service, and a few from private institutions there. And Mwalimu Sacco is as old as next year we should be celebrating our 50 years. So that's quite some milestone achievement. So having started with a number of around 11 members then, it has mutated into 116, and we continue growing as well. So as we grow also, new things come.
Yeah.
And those are some of the things that we deal with as we move on.
Indeed.
Yeah.
How much are you holding in savings and assets?
Right now, our asset base is 63.6 billion.
So it's just 63.6
3.6 billion, as of December. And of course, the savings portfolio stands at 47 billion. And the loan book portfolio of also around 42 billion.
Okay.
Yeah.
Can we take a few steps back? And what was the rationale behind starting the Mwalimu Sacco? I mean, years and years ago. We're looking at well over 50 years ago, or almost 50 years ago. Why? How did it come into being?
Right. It was thinking of some 11 TSC secretariat staff that thought that they would come together and put some savings so that they can access some affordable credit for purposes of investments. And that idea mutated into something that was bought in by teachers of this country. I mean, basically the post-primary teachers. Because that was the initial catchment area that Mwalimu had. And over time, I mean, there was a lot of interest because at that time there are not so many Saccos that were there then. And even in terms of how Saccos were being run, actually they were being run from the ministry, mainstream ministry, which of course seated at the Kencom House. I do remember when I left college in '94 then, and by the way, to be clear, I started working with Mwalimu National before I exited and came back.
Yeah.
Yeah, so it was kind of a career swell. Yeah, so when in '94, could find that some of the operations that were normally bedded at the ministry, even signing of the checks, even approve of the loans, which was a little bit bureaucratic. But I see as time goes by, as the regulatory framework was also reviewed, I mean, that autonomy came into being. And of course, remember that time also being part of the banking system, not so many banks would allow very low or rather little
deposits.
Deposits. So that's how Saccos started to thrive. And that's how Mwalimu also got in the opportunity to now embed itself within the teaching fraternity. And of course, that has been the story. But again, other players came in, other Saccos came in, which of course mainly operate within the counties, and also got some big chunk of market share. So that's where we are now.
You know, it's really, if you look back into the Sacco movement, of course it started with teachers and other civil servants doing various other cadres, right? And looking at how the members would use the Sacco to develop themselves. Yeah. They'd use the Sacco to, go and take a loan here, pay school fees. It's coming from the Sacco. Take a loan for development, basically just those basic developments. And now the Sacco, I'm sure, has very many products that it's offering. It's not just, school fees, loans, and personal development loans. You have very many other things. What's the most popular product that you have right now?
I would say that the most popular product we have is called Vision. I mean, it's a long-term loan that, of course, most of our members can be able to access large amounts over a longer period of time. And of course, that affords them an opportunity to, venture into some of those capital-intensive projects. But over time, there have been needs that keep on coming. One of the things that keeps us awake as a Sacco now is how do we make the institution more sustainable? More sustainable in the sense that if we look at segment, rather our membership in terms of the age group, you find that the age between 35 and above accounts for almost 75 to 80%. Only 20%, falls in the category of the youthful category. So what does that mean? The sustainability of the institution in terms of us having this institution moving forward lies on this other segment of 20%. So we need to relook at our policies. We need to relook at our strategies of how do we become more inclusive in terms of bringing this segment of age group into our membership, so that we can see these institutions long after we exit. But that said, then to sum up the question that you'd asked, what we have looked at is that the traditional products for the Saccos have been with us for a long time. But now the market is demanding something different. They're demanding mortgages, they're demanding issues like touching on asset finance, they're demanding issues touching on even overdrafts, because we have those quasi-banking units that we run in terms of FOSA. And recently we did launch some products, in terms of the mortgage refinancing in collaboration with the Kenya Mortgage Refinancing Company. We have asset finance, we have insurance finance. We are now looking at another frontier through our quasi-banking unit in terms of unsecured credit, because what we are finding out is that the youthful segment of our membership are not very keen to wait for 6 months to get a credit. They get a job today, tomorrow they want a credit. So how do we capture that market moving forward? We need to open up and see how do we bring them along so that we change the traditional way of doing things. But that also calls for the policy makers to relook at the Sacco model. How sustainable is it in the medium and the long term with the current age group also, coming in with their financial needs.
So, looking at the membership, which is huge, it looks as though members are made up of those who have gainful employment. Who else is allowed to join apart from those who may not have a regular pay slip, for example? You're taking in other members?
Right. I think that's a very pertinent question. I mean, as you put it correctly, right now, the bigger chunk of our membership are on pay slip and actually monthly pay, whereby we receive deductions through monthly checkoff. But we've seen over time that as we progress as institutions within even the Sacco industry, there is also need to capture the non-salaried segment of the population if we're going to move in the direction of the financial inclusion agenda. And many Saccos have actually mutated to that, or rather moved to that space. And what they have done is that they have changed even their brand. The traditional names that they used to be called, like Baringo teachers, now it's Boresha.
Yeah.
Like the former Kilifi teachers, now is Marika. So even as Mwalimu National, we are looking at what is it that probably we have to do to gain that captive market in terms of serving all. And one of the things that we've noticed as we also look at our strategy moving forward is that there's a bigger chunk of business outside the non-payroll membership. And more so the micro-lending aspect, which of course, as we look at the figures of the recently launched, what do you call it, the Hustler Fund, which of course right now the policymakers are working on a framework of how to mainstream that within the Saccos. There is a bigger chunk of business in that area, and it's one of the things that you're looking at. How can we be able to open up our basket more? Because that is the only way we'll grow. Otherwise, if we remain more close to salaried membership and probably those who we are very certain in terms of where they
regular income.
It's something that I think the banks have done very well. Yeah.
Because times are changing, aren't they? I mean, because so now just connecting what you've just said with what you said previously about the younger generation who for the really working system has kind of adapted to take them on, because somebody staying in one position for 30 years, that seems to be changing quite some, isn't it? So somebody who leaves university or leaves tertiary and then gets a job is looking for credit. And so you as the Sacco is having to change that. The digital era is right here in our faces. How have you then, beyond saying what access to credit can we create for these young people who've just come out and want a microwave answer, a microwave solution to their credit issues, and at the same time folks who are on the fly, who are not necessarily sitting behind a desk, but have legitimate sources of income, but need credit. So in the digital world now, how is the Sacco then being able to move from where it was teachers and a salary, straight jacket, to now the way the world has evolved? How have you been able to now move?
Yeah, let me speak from industry perspective before I narrow into our situations as a Mwalimu National. Over time, there have been a lot of innovations in terms of the products and offering within the Sacco industry, and those innovations have come with digital transformations in terms of how the services and products can be offered, created convenience and that. But again, depending on each and every Sacco, I mean, how they look at it, it's been a big debate in terms of how do we move to this segment of age group. As Mwalimu National, our members actually can have their children join the Sacco as early as school-going age. So with that, you'll find that we have a Category B membership. Of course, they will not participate in those AGMs decisions, but they can save. And of course, as they school, we also walk them through mentorship programs to ensure that they align themselves to the Sacco aspirations. But that is only limited to our membership. So what are we looking at in terms of beyond our membership? The digital technologies have actually made it a little bit interesting in this market. Members are asking for more convenience. No one wants to move to a brick and mortar branch to access service. They want instant response to their queries. They want more, in terms of what we have to offer. So our journey towards digital transformation has been, what are kind of the technologies that we can employ or that deploy to address some of these issues of convenience, some of these issues of security, some of these issues of access to credit without a lot of. And we have moved into that space. And of course, we're still doing some more innovations. But one of the things that is also coming and featuring very prominently, which of course is what you call the modern day imperative, is the digital trust. If you're going to move me to a platform, then can you guarantee that when I want those taxes, I can access them anytime without a lot of disruptions? When I make inquiries, I can be able to deal with the responses. Actually, the responses are available anytime. When I make, or rather, access some of the credits and saving services, I can be able to do it myself, even onboarding. Why would I fill a physical form to join an institution?
To join a Sacco.
Yes.
So what we're doing currently is that many Saccos, and I think that's what I can talk for them, they have really done a lot in terms of innovations. In fact, from my phone here, I have an option whereby I can onboard any other person that I meet. That's why through our mobile app, the current one, I can be able to onboard and just give me your details on board you, because we are linked to the GPRS for purposes of KYC. So that's where we are moving. But again, it's a question of, can the Sacco model in its current form be more sustainable in the longer term? That's a big question.
What is it policy-wise that would make the current model not be sustainable? Because you've mentioned that now 3 times.
Yes. One of the things that we are looking at is the issue of deposits mobilization. Because you see, when you're in a financial services industry, the most critical aspect is liquidity. And how do you get that liquidity? Liquidity basically comes from deposits, which of course that's what banks rise on to make those huge profits. And of course, it's your money, it's my money lying in a bank somewhere because I don't have any need for it now. I can lend it within 72 hours, 48 hours and make my money. So that aspect of liquidity in terms of deposits, we need to open up that space in terms of bringing in more people, rather the public, in terms of opening the membership, so that you can attract more deposits, even a micro deposit, because that is where money is. And again, another thing that probably policymakers need to deal with is the context of the fiscal or other taxation policy within the cooperatives, which is a little bit punitive. Because currently, if I want to onboard people who are not defined within the realm of my membership, I have to pay a higher tax if I trade with them. So the model is so confined that you can only trade with your members, but if you go out, then give us this amount of tax, which of course is really stifled the market in terms of how we move. So there is already some initiatives going on, and of course our current CA is also very pragmatic. He's really pursuing some of those policy initiatives that are very, punitive to Saccos, so that we can move into that space whereby you can onboard people who are not even defined within our membership, but of course guarantee them access to credits and their deposits and any time they might, just like the banks do. The second issue is about the element of the payment and settlement system. Saccos are not in that space. It's only banks that can access that. And that's one of the critical game changer, that if Saccos would have that access to payment and settlement system, why would we...
So here we are talking about RTGS.
You can do RTGS from our if we had that access, we can do RTGS from our premises within our quasi-banking unit. We can issue checks like the banks do. We can do any other transfer. We can trade in any other form of business that the financial, the mainstream banks have already, leveraged on. And it's one of those things that, will be a game changer, because if you go to US, actually, some of the larger, they call them credit unions, are bigger than banks, actually much bigger than banks. So that is the next frontier in terms of... If you
Some Saccos in Kenya are bigger than very many banks.
Mid-tier banks, of course, mid-tier banks, and including even Mwalimu National. We rank into the mid-tier kind of bank. Hopefully we will be somewhere, probably in 5-10 years. We should be somewhere near the
tier ones.
But that growth, as you can see, requires some policy interventions in terms of the, as mentioned, the payments and settlements, in terms of the deposit guarantee, which of course is enshrined within the current legal framework, in terms of the central liquidity facility, whereby they can lend among themselves to be able to balance that liquidity. Shortfalls any time, so that they can be able to serve their members generally. But again, the riding point here is, as we move into the future, the element of the segmented membership must be addressed, so that you can also have, actually, as I was seated here waiting for the interview, one of your staff was asking me, can I join? Because I think she saw the products that we launched in terms of mortgage refinancing and everything. I said, right now, it may be a little bit of a challenge, but let me see what happens in the next 2 years.
What would the challenge be?
Because you see, the Saccos operate within what you call a bylaw. A bylaw is kind of a sub-legislation that defines the segment of membership where you draw your membership. The moment you go out of that, then it becomes a little bit complicated to be able to do business with these other people. So that element alone, you see, is already denying me an opportunity to onboard a potential client that is ready, because they're seeing what they can benefit from in terms of the financial services that we offer. So that is a tipping point.
Kenneth, Mwalimu National is participating in the KMRC deals, right?
Right.
In the home deals. Right. How does it work?
It's a partnership. KMRC, of course, is a government institution that sits under National Treasury, and they have a funding from the World Bank, and they also have a funding from African Development Bank. And through this funding, it was a government initiative, what you call the low-cost housing initiative that was meant to address. So what happens is that, being a member of the Kenya Mortgage Financing as Mwalimu National, we've been able to ride on their softer terms, because the lenders are single digit. We also lend at a single digit. To be precise, the lenders at an interest rate of around 6%, we lend at 9%. So even in the current market, with all the
lowest,
would you find any mortgage that will cost you 9%?
Nope.
So what we do is that we leverage on that funding to online to our members, based on a framework, a policy framework that we have agreed on with them. And of course, what we do is that if we lend to our members, they refinance whatever we have lent, as long as we meet the KYC conditions and all that goes with it. So in essence, the Sacco is benefiting from the spread. The spread in terms of the 9 and 6.
9.
So the 3, without using our own funds. We're able to
usually get the 3.
But you see, for them, they must also get the market to be able to access this credit.
That's true.
So that is the way it operates. So it's we lend, they refinance. So even in terms of the cash flow, we're not really strained with that kind of a product.
And it's a good thing. Let's take a break.
This is the Situation Room, the only way to start your day.
Kenneth Odhiambo from Mwalimu National Sacco. Kenneth, you told us, in this Sacco business, you must continually innovate. First, you need to attract the younger demographic, and the younger demographic will want things in a different way from how the older demographic of your members were interacting with the Sacco. Now, this we'll talk about then. the digital transformation and whether you're adopting it and how you're adopting it. Let's look at this younger demographic wants things faster. You talked about, I don't have to walk into a banking hall for a Sacco to go and register membership. I also don't have to do any of that to go and apply for a loan. I don't have to do any of that to deposit or withdraw my money from the FOSA. So how do you make it work as Mwalimu Sacco?
Right. From our perspective, the digital evolution is here to stay. And that being the case, then, what as an institution do we do so that we sustain this issue of our members having the convenience, our members having the comfort of accessing ourselves, our members having the courage to access some of these digital platforms? First of all, we look at what is our business, what does our business strategy speaks to the institution in terms of how we intend to move forward. After knowing exactly where we want to go, then we now replicate that in the context of the digital transformation journey. And one of the things I'd want to state here is that a lot has happened in terms of that journey within the Mwalimu National and also even the Sacco, wider Sacco sector, which is very good. One of the things that we strive to do is that in our every innovations that we create, we must first of all see value in the context of IT governance. And what does that mean? That your IT governance must speak to your IT strategy, which of course transcends the bigger strategy. And that's the way we have looked at it at Mwalimu National. And that has really helped us in looking at what is it that our members want. And one of the things that we keep on monitoring is that what are current trends in the market? What are the new technologies that are coming up? How do our members resonate with them in terms of access? What would they like apparently to happen moving forward? And of course, you've stated very correctly that the youth segment is one of those things that keeps us awake in terms of as we innovate and digitally. And of course, that said then, how do we position our products so that we don't have to create what we call the traditional inconvenience, whereby if I want a loan, I have to look for a colleague that we're in college. I'm in Nyanza, I have a colleague in Kwale. I can't get him, so I have to move around with a physical form and fill it in.
To get guarantors.
How do you create a platform whereby I can apply for loan, call my colleague in Kwale, call my colleague in Lamu, call my colleague in Turukana. Can you log into the portal, guarantee me that loan? So that element of turnaround time also is dealt with. Those are some of the thinking that you're doing. The other issue that we are also looking at is that I talked about the membership. As I mentioned, the youth segment has no business telling them to fill a 3-4 pager form. It's none of, they will not do it. So how do you create convenience to them through that digital transformation to be able, or rather to allow them to access onboarding of membership without moving from their desk? And you can do your KYC if you are connected to the government GPRS anyway. So, and the last one is, in all this journey that you're working in the digital transformations, where does your digital trust sit? And what digital trust here is that as we innovate, as we create all these platforms, as we bring something new, the client who is a member must have like 3 things. They have the comfort that the platform will be available to them, whether they wake up at the middle of the night. They have the comfort that whatever data that they have given you, because you see there's a lot of data that you're holding, personal data that you're holding from members. How are you able to protect it in terms of giving them the privacy and the security of it? We also have a responsibility as an institution. How do we ensure that within our digital ecosystem there exists that element of comfort that whatever is being offered will continue to improve it more. And of course, what are the various options available? Options available, what I'm saying is that personally, I may not have a preference to go to a banking institution and use my card. How do I make that available to someone who would more akin to using the phone? Let me give you something that happens, and this is where the age demographics comes in. I have a category of VAT members that they don't believe on phone too much. They want to interact at the branch.
Yeah. They want human interaction.
And when I asked one of them, why is it so? And yet you spend a lot of money going to a branch to access the services. What I was told is that is the only time that I can visit a town. And that is the only reason when I probably talk to my principal, they can allow me to go and visit a town. So you see, people have various needs, but the youthful segment is totally different thinking. Actually, as you put it before, they're even asking us, we need loans and we need now. I'm employed today. My first paycheck probably is next month. Don't tell me that I have to wait for 6 months.
And how are you dealing with that? I mean, because it goes against the practice that has been there for 49 years, right? That you're going to have to see some kind of history. And I think this is it. In this digital age, in this, consumer-driven demand, it is, you have to basically, you cower to the needs of your clientele. So how do you do that then? Everything that you've known has been that structure.
Right.
And here is this huge group of people who could be very, very, good potential clients for the Sacco who are asking you to go against everything that you've done. Do you adapt? How, rather, do you adapt to that?
Yeah, I think you brought in a very important element of being agile. I mean, being adaptive. Institutions in their form must be agile, must be adaptive, so that they also change the trends. What we have done, and of course many circles have also done that, is that we have created products that is fit for their purpose. And for example, for us, we have what you call a Karibu loan. A Karibu loan is for a new member who has not earned even a salary. So we give you some element of, let's say, like 100,000, so that you can even start buying the basic elements of what you need to
start life.
Start a life. Because sometimes you're posted into Lamu and you have not earned any salary, but you need somewhere to stay in. You need to have your basic equipment or other utilities that you need to use. We have also other category for those members who have not reached the 6 months. We have also another loan product, which of course now offers them a big amount. We look at your pay slip, how much can you pay? We assess it. Yes, you don't have a savings. How can we lock you? We can lock you in, give you the loan. Part of it goes to savings, so that it pulls you up there. As you have this loan, you also saving. So that's how we capture them as we move forward. But the most of critical element is, what about those who just require some small amounts that may not really have a high risk, like a micro lending through the mobile phones? If you have a salary, even non-salary, we lend you that. But what we are looking at now is moving away from that traditional guaranteeing framework to what you call a credit scoring framework. If you know your character, and you stated it very well, if I know that we look at your records, that you pay your bills on time, your obligations are not everywhere. I mean, every time you're not listed. Why would I not give you even 10,000? And you see, we look at the volumes. If I give 10,000 for 1,000 members and only 10 of them default, I would have made my money through
the other
spread.
900.
So where is the risk? So that small elements of amounts, I mean, would already covered my risk at one moment in time. And that is how we look at our youth. And now we want to move to another sphere of unsecured credit. You don't tell people that you have to be guaranteed, and of course you look for guarantors. If I have your salary, unless those people who are salaried, I mean, or a business, they have that business, and you know very well that there are inflows coming through your quasi bank. Why would I tell you to go and look for a grantor if I have your money coming in? And see, that unsecured credit I mean, is one of those game changers that we're actually targeting the youth, so that they, without them thinking of moving to banks, because they're very quick at moving to banks, then they get tied up, and then they start, the loan is not moving. 3-4 years down the line, they have only been paying interest.
Yeah.
While other colleagues are saying, I took a loan from a Sacco.
I finished.
I'm only remaining 1 year. It's 3 years, it's 3 years. So that is how we're looking at it moving into the future, so that we accommodate this critical segment that is very important for our sustainability of the institution. I want to leave an institution that I can see even 10, 20 years after I retire. Not an institution that will go down when I'm already in my last 30 years. And I think I would have really done.
You want to take pride in seeing that you contributed
Absolutely.
to something that's still standing.
Absolutely.
Which is something also which is very big. I mean, you mentioned trust, and trust here was in the context of the digital platforms.
Yeah.
People want to know that, this platform that I've built, I mean, that I'm using is trustworthy. It's going to be available when I need it. It's my information and my data is secure, and my information is kept private. That part of availability.
Yeah.
We see all the time, people talking about system iko chini,
Yes.
system iko down.
Yes.
System. Do you experience that in your circle? And how do you address, those moments when maybe there's an influx of people, particularly towards end month,
Yeah.
systems will
Yeah.
get bombarded by members trying to access many of them at the same time. How do you handle that?
Right. Let me answer the bit of question in terms of in our situation. Yes, it has happened. And of course, that is one of the pain points that our members go through. It is not one of the things that you also want to sit as a CEO. And even my colleagues see happen. Because you see, when my salary comes in, I should get access anytime I want it.
Yeah.
So one of the things that I know even within the industry that we are advocating for is that your IT platform should speak to your availability in terms of the service that you offer. And how do you do that? First of all, I know within the industry you have had challenges in terms of getting the right IT platforms. But of course, that is changing with time. And even in our situation, I know we onboarded a new core banking system, but these things take time. What we normally do is that we must have resilience in terms of the systems that you have. You must have alternatives. If I have a platform in mobile banking, I should also have a platform in agency banking. I should have a platform in what you call the cards. So that you give your members options. In the sense that if I can't transact via phone, then I can get my money through an agent bank.
Yeah.
And that kind of alternatives give them a lot of comfort because they say it's availability. But again, you also have to invest in systems that give you guarantee in terms of availability of service. Because one of the things that really becomes a thorn in institution flash, also in financial sector, is non-availability of the system. And of course, that over time, I mean, it depends on how your IT strategy speaks with your bigger corporate strategy. Because many times we embed some of these things together. But the way we look at it at Mwalimu National is that this is the strategy based on the business needs.
Yeah.
How does IT come in to address those needs?
Yeah.
That is basically what needs to happen. You don't also give an IT a KPI which is not linked to any business.
To any business, yeah.
So that is the journey we're walking. We have had our challenges, of course, but so far so good. We recently launched a new mobile banking app. The feedback that you're getting is marvelous. I mean, the members can now access their accounts through the phone. They can even do transfer and account transfer from Mwalimu National to a bank Mwalimu National.
Using the app.
We are moving now into the space of allowing them to even access bigger credit through a phone. So what we are saying is that those small emergency loans that we spend a lot of time having our staff review in terms of eligibility, why can't we move them to a mobile platform and deal with the bigger credit
amounts
that probably portends higher risk?
What would that do in terms of traffic of folks now? These little amounts that you're talking about, again, probably feeding that audience that you talk about who's looking for something quick, let's
yeah,
go.
Yeah.
What would it do? What would it free up then for you to be able to focus on? If people can now go to their phone, and deal with that, and the system organizes it, then I'm assuming that the things you would be able to do when that is moved would be monumental.
Right. When you have your systems working for you, then you really have a lot of advantage in terms of how you can even reorganize your resources. Because right now I have 18 branches spread all over the country. Spread as far as Kapenguria on the other side, spread as far as Migori, then the other one is Mombasa. In these branches, we have staff that are working there. We have the infrastructure that we have put into place. So that will help us leverage on the efficiency in terms of what other areas can we deploy them, and more so in areas that focus on innovation in terms of what is the new thinking that probably we're looking at in the medium and the long term. And of course, that freeing up of the resources and consolidating our positions also has an element in terms of the costs that the institutions incur every year. Because at the end of the year, like right now, our members are asking when are we paying them their dividends.
Right.
So that dividend, for it to come, you must be very efficient, you must be very lean. What I'm looking forward to as we move through this digital transformation journey, the 18 branches probably will only have to cut them down to 4. Because if I can do everything here, why
do
would
you
I
need
a
another?
branch?
Right. And somebody who's in what? Because essentially, is that not what you're saying now with this digitalization? That it doesn't matter where somebody is. Kapenguria, you're on the system, so you're able to serve whoever it is.
Yeah. So because you see, by nature of Mwalimu National, we can't have branches everywhere, but we have members everywhere, including even the volatile Lamu Tana River area. We have members there. We go to Kwale, the other side, the border of Tanzania. There are members there. We go to Turkana, all the way from Kapenguria. We have members there. The brick and mortar kind of operations cannot work for us in the longer term. And that is one of the conversations I keep on having with my colleagues and the board, that we cannot afford to be opening branches. That is not sustainable moving forward. But what we have to leverage on is the digital technology, which of course, as I mentioned, guarantees digital trust. Because the moment you also have your clients not having trust in your digital, probably like what your friend just said, availability. That would make me move to another financial institution. You lose. So we must have that resilience and element of continuity to assure our members, or give comfort to our members that whenever they need financial service, whether it is their deposit, whether it is a credit, it's available and they can be able to access it. That's what builds that trust, that digital trust. And of course, the security in terms of data, so that the data that you entrust to us, you don't find people starting calling you tomorrow and giving you offers that are not there. Yet, Mwalimu Sacco holds your data. You must protect that data because even the current legal framework is very punitive. And those are some of the things that you're looking at. And hopefully, when our time comes to go home, we'll leave a better institution.
There's something else on the level of trust. And trust here, Mwalimu Sacco, 50 years, it has built some level of dependability. There are other Saccos that are coming up, and people, join the Saccos few months or years down the road, they're belly up. So it's about issues of corporate governance. Even though there is a Sacco regulatory authority that, regulates and monitors how you operate, how do you, as Mwalimu Sacco, look back into your corporate governance and say, we are now going to even strengthen our corporate governance better? Our decision making, our management is going to address the actual needs of our members.
Right. I think you brought a very interesting perspective to that. And of course, as you rightly put it, is that governance is the fabric of sustainability of the institutions and of course growth. And of course, each institutions have their own challenges. And of course, you and me know that even as Mwalimu Sacco, we have had our issues before. including issues of Spire Bank, if you remember.
Yeah.
We have a housing unit that in Kisaju that, of course, we currently offloading. The uptake has been good for the last 2 years, but before then, there were a lot of challenges. But of course, I remember when we are dealing with the issue of the bank, what I told one of the journalists that in Mwalimu National, when we make decisions, we don't lament about them. If we make decisions, they're not working, we regroup, we rethink, we refocus on what can really, add value. Otherwise, if we keep on lamenting and not giving members solutions, then we are not also fit for purpose to sit to those institutions and make those decisions. But the issue of corporate governance is very critical. And it's one of the areas as Mwalimu National, even in our board charter, even our management structures and everything, is taken very seriously. Every year, we have what you call a board evaluation that is done. And of course, each and every board member is evaluated, including myself, on aspects of corporate governance. How have you been able, your colleagues, of course, give views on you, and that feedback has helped us to build systems and controls around how do we need to move forward. And I'm happy that the issue of the bank is behind us. I think that is one of the big plus that I can give the board and my fellow colleagues, management, in having that matter settled. So now, what remains is that how do we move forward in view of some of the issues that we need to deal with. And it gives me a lot of comfort because I can now sleep 7 hours.
Well done. Kenneth, thank you for joining us.
Thank you.